Good morning. Welcome everyone to Admiral Markets webinar. Today's focus is strategy, and I'm looking forward to take a look at the charts and use technical analysis to talk about patterns. In fact, that's our focus of today. Please follow us on @Admiral Markets and @Chris Wersick for up-to-date content that is being tweeted almost around the clock. So take a look and find out the newest basically through Twitter and our Twitter handle. All right, first of all, before we start the webinar, though, be aware that this is shown to a global audience, this webinar and recording, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk. It may not be suitable for everyone either. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer, and you're also aware of the risk involved when trading. A quick note about the, let's say, global focus of this webinar. In general, we're always taking a look at what the trend is in momentum. That's always very important information. Then we want to find out, what kind of pattern or Fibonacci or opportunity we're looking for within that trend or momentum or against it. Then I'm checking filters, for instance, support and resistance levels. That could be very important news events. And once that is all good to go, then I look for a decision zone that I think is interesting where I can trade. For instance, a bounce at this 50 fib could have been a decision zone. I look for a trigger, how to trade it, and then see if the reward to risk is interesting. From an economic calendar point of view, yesterday was a big day regarding the EU and UK. The UK was represented by the Prime Minister David Cameron. He was there with the 27 other EU nation-state leaders in a summit. Today he's not there, so there'll be informal meetings, I guess, throughout the day with the other 27 leaders for the first time without the UK leader in over 40 years. So that's already the first kind of concrete change that we've noticed since the Brexit vote to leave. So, there's a lot of news developments going on and political things, and this is, to be honest, between you and me, from a trading perspective, I think, things would have been a bit calmer for us technical traders, I should say, if we probably would have had a stay vote. We wouldn't have all these these events, and there's just a lot of focus on politics at the moment, which is logical, right? Considering the consequences that we're going to see. So that kind of makes perhaps trading a bit more difficult. So I guess for technical traders, from our perspective as technical traders, it could have been a bit easier environment if there would have been a Remain vote. Now this just brings a lot of months of talks, and price could react maybe to that and maybe less technical. So that's why I'm saying from technical perspective, it could be a bit more difficult, unfortunately, throughout that time. But that's just life, and we have to deal with that. That's the choice that was made, of course, and we don't have, unless you're British, you don't have any influence on that. But this is the consequence for perhaps technical traders. From a news event today, inflation rates, business confidence, consumer confidence, that seems to be a lot of pound news as well. That seems to be the lineup for today. So let's take a look at the quick heat map. There must be a lot of movement, of course, from the last few days, but I think that yesterday did slow it down on general speaking. So let's take a look if that is reflected in this heat map. By the way, good to see you, Darshan. Oh, wow, you saw Nenet. That's great. Pound dollar, I'm not sure. We'll take a look at that. Excuse me. Yes, the range is a bit slower. The yen specifically still managed to break 1%, but we know that yesterday was well into the 2.5%. So still 1%, very decent move for a day. So still some larger movements, but slowing down compared to Monday and Friday. So let's take a look at the charts. All right. That's a pity. No. Sorry, Darshan, that you didn't manage there. But I'm sure you had a great time. In any case, I think I've heard good things about the area and city, so I'm sure you had a good time. Good that you're back in this webinar. We are going to take a look at this euro dollar now, and we see basically a pattern. We see a contracting triangle, and it's actually getting very, very tight. The space between these two lines is almost zero. So, the break is going to happen at one point or another. But I don't like breaks when when price is basically almost forced to break due to time. The best breaks we get is when the contracting triangle has developed about 2/3. So depending on the angle, of course, of these two lines, we get these two lines will eventually hit each other if it's a contracting triangle. If we extend them far enough, like this, all right, the contracting triangle goes into reverses in a way, right? This is the breaking point, or the break-even point, or whatever you want to call it. So eventually, the triangle is going to break just due to time, as time moves forward and price moves sideways, right? But those breaks are not the ones you really want to trade with contracting triangles. You want to trade price breakouts where price is showing momentum to push through a support or resistance. The best point is approximately 2/3. So when we measure from the start to the very end here and slice that into thirds, roughly maybe like this, the best point is roughly around the second level here. It doesn't have to be around there exactly. It could be halfway. It could be a bit less than half. Those are fine too. I mean, less than a third is probably too soon, or you maybe wouldn't even know it's a triangle, in fact, right? But optimally, it's around that point. That's where you have the highest chance of a good breakout, and that's where you have the highest chance of a good follow through and good momentum after that. If it takes too long, yeah, then the whole pattern is basically stalling, and if price does push through this trend lines, then you might wonder, is it really a break, or is it just price still going sideways? So this is not an ideal contracting triangle at this point. It is a contracting triangle, but the break is less of value to me than it was perhaps at the 5 candles ago, for instance, right, on this 4-hour chart. So the high and low become even more important. In fact, with a triangle like this, because I think we really need to see price break below these bottoms here before we have any substantial breakout to the downside. Break to the upside is even less attractive due to the fact that we have a strong bearish candle that's still dominating and basically the master candle. Now, it is true that this master candle is becoming less important because we're having such a big consolidation. But if we look at the daily chart, I still think that all odds when looking at this daily candle and the structure, all odds are still for one more push, at least one more push lower, if not many more, right? So it's any break to the upside should run into resistance and should be turning at these fibs like 111.50, 112, and 112.50. Only a break above 113 would I really start to become neutral, and I would want to be cautious of any downside. So any break to the upside is less interesting, and I'm looking for reversals at these fibs for further downside. A break to the downside is interesting, but because the contracting triangle, as I just pointed out, is running out of space, running out of time, I would need to see price break below 111.25. I would like to see it close below it with a good 4-hour candle, something like this, for instance. All right, and that would be a breakout candle. Now, the best way to trade breakouts, I think, is actually by zooming in to lower time frames. So we're going to dive into that in just a second on this euro dollar. but Darshan mentioned 70 pips on the pound, so I was kind of curious. Let's take a look. 50 pips indeed. All right, the last time I looked, price was breaking this trend line here. Not something I wanted to trade, though. Despite that pattern break, due to the fact that London Open is always a bit choppy, and you can see why. You got a break to the downside, followed by a quick move up. And why this is happening, I think we're seeing, obviously the whole landscape is it's tremendously large. This downside is 1900 pips. So even a consolidation, a small move in small consolidation, is already quickly 70 pips indeed. So the gigantic moves are just changing kind of the landscape, and even until now. So even small moves are actually quite big compared to what we saw, let's say on average before the Brexit. So yeah, that's I think one of the reasons that these pips, even though it's small moves, these pips add up quickly indeed. Now, from a pattern point of view, I think we're still looking at the downside to the minus 272 target, as I explained yesterday, and perhaps even further. But we are seeing a correction right now. So for a breakout to happen, I think we're going to have to see price on a 50-minute chart at least push through these particular bottoms. That's the wrong trend line. 1 second. Like this. All right, and upside, well, that's a bit difficult. We do have a trendline break already, in fact, like this. So that could be already a first kind of indication that price is going to make a bigger retracement. We talked about it yesterday, the fact that basically price could be making a zigzag. Yesterday we hit the 272 target at 134, but there is that space to go up to 135. There's a bigger target and a bigger retracement level. So, there is that potential for a continuation of the correction before we hit bigger resistance that probably will send it back down. So that is definitely looming today, I think. The upside, however, is a counter trend trade. From my perspective, from wave perspective, at least. All right, but doesn't mean that it necessarily wouldn't be a good trade throughout the day for intraday trading. In fact, if I look at the ACU strategy that Nenet uses and has made great results with, basically tripling his account with that, there was a setup on the upside already on a 50-minute chart right here around this level, and that trade is already up, has been up some 45 pips, and might be even still in that trade or taking profit or moving to stop loss. So that worked out well. So you see, there are some methods that allow kind of for counter trend trading, even though that the bigger momentum is obviously down, the bigger trend is down. And I do think that eventually, considering that force that we see here, if price does get up to these resistance levels, that we'll see a turnaround for one more low, at least, if not two lower lows. On the hourly chart or 30-minute chart, if we break this support basically and break this triangle to the downside, I think that could be very interesting for breakout to the downside. So I think we got good breakouts, basically bearish breakouts on both the euro and pound. I do think that if we get upside, that we should see price bumping into resistance at sooner or later and turning around back down. So how to trade these breakouts? Oh, thank you, Darshan, by the way, for that. And yeah, this market environment is quite volatile. There, stop losses are definitely going to be bigger in general because of these big moves that we see. Pound yen too, crazy. It moved even more, obviously. Pound yen moving some on this day of the Brexit. I think it was 2,500 pips. more than that, 2,600. And we've got basically a sideways move here for 2 days with a range of 500 pips, right, from high to low. So, these candles seem very small, but still 500 pips, quite amazing. So we have to trade these breaks primarily because we're looking at pattern trading. Fib trading, is a different story. It's not the focus of today, but if we do get bounces, I'll be looking for candlestick patterns actually at these fibs. That I think is the best way to trade the basically retracement to the upside and reversal back down. Candlestick patterns at these resistance levels. Breakouts, I would do differently. I would be looking for good candle closes on 4-hour chart are always useful. All right, nothing wrong with that. This is perhaps difficult to see the chart. There we go. So, basically a good candle close below these candle lows. You see there are a couple of 4-hour candles above this 138 probably. What is it? Sorry, 132.80, excuse me. 132.75. All right. So we see a couple of candles going sideways there. So using a 4-hour candle close below that level with a decent sized candle, those are definitely signals of a good breakout. And once we have that, that's one way of trading it. That's one way of getting a confirmation as well. The other way, what I like to do is zoom in to lower time frames and wait basically, as I've discussed before. So perhaps this is something that you've heard before. If you're joining a pattern webinar for the first time, it's new. What I like to do is basically find a pattern on a time frame and then zoom into a lower time frame as it breaks and wait for a pattern to occur after the break on a lower time frame. So to give you a bit more specific, let's say the pattern happens in the 4-hour chart. So I can zoom in to the 15, 30, or 1-hour chart, wait for the break, a new pattern, but smaller pattern on a lower time frame, before trading that break or the turnaround here as it continues. And the reason is to avoid false breakouts. The thing is that when we have patterns, the breakout could be just first of all, a false breakout, and price does this after that. Or it can revert back into the pattern, or it could just expand the correction and make it sideways correction instead of a triangle. So there are some tricky things here that make pattern trading risky and could make pattern trading fail. I think those things can certainly be partly avoided by letting basically price prove itself after the breakout. By proving itself, it can prove itself the best by making a consolidation, some kind of bear flag, for instance. That shows that the bears, in this case, the bears are holding control, that there's no counter move that is suddenly appearing like a strong momentum to the upside. And if that lasts long enough and the pattern plays out like a flag, for instance, well then there's a decent chance, a good chance that we're going to follow through, in this case, to the downside. So this is what I'm waiting for. So let me show you an example of the past, because obviously we don't have it now, but on the euro dollar, because it's in a triangle as we speak. But this is a 4-hour, perhaps 1-hour triangle. How do you decide which time frame the pattern is on? What time frame is the one I used? What I like to see is that the pattern fits on one screen. If the pattern does not fit, like on the 15-minute chart, we don't see the whole pattern. Well, it's not a 15-minute pattern. On the hourly chart, it certainly fits. So it could definitely be an hourly pattern. A 4-hour chart is a bit small. As you can see, the pattern fits, but it's just in this corner on the right side. So in this case, I would not say it's a 4-hour pattern because it's a bit small for that. I think it's more of an hourly pattern, to be honest. It seems to fit nicely within the screen, but it's also not too small. So I would give this an hourly pattern, the stamp of an hourly pattern. So for a breakout, it would make sense to look at the 15 or 5-minute chart. After it starts pushing through, right, on this hourly chart, we see like a 1-hour candle like this, for instance, push through, or even if it's open or closed, doesn't matter. We see it push through that trend line. I would be monitoring that push on the 50-minute chart. I would like to see price basically make a momentum like that, then make a pause, and this could be on the 5 or 15, and then break that, or look for a turnaround at the fib if it lasts long enough, and if I don't see any strong counter momentum here in that blue zone. I think that's a very effective way of trading patterns. So let's take a look at an example. We need to find a pattern though. First of all, let's just take away everything at the moment and okay, use a new clean chart here. Regarding this mini terminal, by the way, it is part of the Meditative Force Supreme Edition. So take a look at that. You can find more information on trading platforms at admiralmarkets.com. You have Meditative Force Supreme Edition, and you have MT4 Web Trader. So I think you'll really enjoy both of them. The flexibility that gives to you, and the Meditative Force Supreme Edition has so many things besides this mini terminal. So like an alarm manager and order history, viewer, there's a ton, 60 of them. So take a look at that. All right, regarding patterns. Okay, pretty simple. I think that we could say that this is a bit of a rising wedge, for instance. Okay, it's maybe not perfect, but you could look at that. Let's just use this for argument's sake. Let's just use this. Okay, so we just show you the breakout potential here, and not always will you get a pattern after the pattern, but that does, make for the safest trading. So let's take a look at the 5-minute chart at this point as we break out. I'm not sure if this is a good example. I didn't pre-pick this beforehand, so maybe we didn't get any retracement. Who knows? I don't know, but we will find out. All right, so we're looking for a pattern of the pattern as price breaks through this rising wedge under euro dollar a week ago or so. All right, so you see the blue line, that's where we were on the hourly chart, so let me take that away. So we're looking for a pattern of the pattern. After the break, and you can see that basically we have more or less a small triangle like this on a 5-minute chart. All right, so the break, for instance, of that could be interesting. For instance, the break of this bottom here, as you can see, that could be one way of trading that. Or, it's a very small pattern, so it's maybe a bit trickier. But I guess you can see you get the gist of it. This is a small consolidation. You're trying to trade that break as it continues with the breakout. So that could be these candles here as they break out, or it could be a break of the bottoms, right? It could also be, as you can see, we had a second break. This is the first. This is the second. And we had a pullback here, continuation. So continuations back to the resistance levels also provide opportunities for a short-term intraday trade on this 5-minute chart. So those are basically patterns, right? The break, pullback, continuation pattern, the contracting triangle pattern. Those are all patterns after the bigger pattern. The bigger pattern, once again, was the 1-hour rising wedge. 1-hour rising wedge. After the break of that, on the lower time frame, we see contracting triangle and break, pullback, continue. So the BPC. So those are on 5-minute charts. So those are methods to trade a breakout of this rising wedge, but in a manner where price is showing a higher likelihood of continuation. We have more evidence that price can follow through. So this is something that makes sense, I think, for the euro dollar today as well. But with the caution that the triangle is narrowing and that a break below the bottom of the consolidation is needed. Not only this triangle line. All right, two questions I see. Is it safe to trade the euro and pound this week? Well, I would say generally yes, but yeah, it could be good to be aware of these news data and maybe not trade too close to it, at them just after that. Maybe be even more cautious about those data points that are coming out and the news, any breaking news and stuff like that. I think we got to be a bit more on our tiptoes. Let's say it this way, perhaps than usual. I mean, we should be careful in any case, right? And on guard, but maybe even more so this week. But otherwise, in general, I think it's okay. Yes, but just be more careful, I guess, and just keep an eye on everything, and perhaps be a bit more cautious. But I don't think there's a reason not to trade, in my opinion. Even though the volatility was very big on Thursday, things did just proceed as normal in a way. Yes, the bars were huge, but we didn't have a big market stop crash. The price crashed, yes, but it didn't kind of, let's say with the Swiss franc, that it price stopped here and all of a sudden it appeared here. Nothing like that happened even on Thursday. So yes, it's a big political event with big financial volatility and circumstances, and the stop losses are bigger. Everything seems a bit more exaggerated now. So those are things you want to reckon with and factor into your decision making. How to read market heat map? I'm not sure if there's a tutorial. That's a very good question, actually. We can quickly try to find out. Let's see. No, not sure what it is. Okay, let me look around. Market heat map, and maybe best is if you ask me next week again, if it's possible, or tomorrow. I'm not sure if I'll have the answer tomorrow, but probably I will. All right, then I will get back to you on that. Okay, but in general speaking, just a quick comment on it is that the bottom, maybe that's already enough, I don't know. The bottom shows the number of pips of movement in the sense that the range. On the side, we see the percentage change. So the bottom shows basically how much price has moved up and down throughout the day. Whereas the percentage means if price can move up and down a lot throughout the day, but eventually just close where it opened, like this. So in that case, we could have a currency pair that's way down up here because it moved a lot, a lot of volatility, but it didn't move up or down. Other pairs could have like a trending day, but very slow movement. So they could be way on the left because there's no movement, but way up here because there was directional movement. That's how you can read, this particular graph. Ranges basically just the movement of a pair of today compared to yesterday. Well, anyhow, all that discussion, it doesn't seem like we're going to get a pattern break to the downside at the moment. The euro dollar is moving up. And pound too, as I said, on the ACU system, there was a signal for upside at about 133.20. And price is already up 60 pips. So anyone in that trade, I would recommend now to take profits. All right, 60 pips is more than enough. It's early in the day. Price is at the M3 pivot point. It's also at a 3/4 level, 75. By the way, if you look at Murray math, it is in the overshoot, very, very strong, resistance area. I'm not saying that this could stop price from continuing further later on. I'm just saying anyone who took trades in this zone here, either on this dip or where perhaps here on these bars, I would take profit here as it's already moving down, but a few pips as we spoke, but as I'm speaking. But yeah, 60 pips will be good for this for this environment at this point, I think. All right. So today could be very much so a bullish intraday day. Yesterday we had it a bit. I took longs on the pound dollar here, locked in also some 50 pips for this upside here. Market has been in a range so far on the pound, but looking at this momentum, we might see a continuation up to, let's take a look, what levels. Here on the pound, just like the euro dollar, we're looking for a break of this purple line, of these support levels, looking for a pattern of small time frames and then a continuation. That would be the best pattern breaks on the euro and pound. But will we get it today? Maybe not. Maybe we'll get it tomorrow or Friday or maybe even next week. Who knows? But that is definitely a trade I think is interesting and I would be looking for. Now, the upside is actually a zigzag potential trade. We talked about zigzag yesterday, Fib zigzags, using Fibonacci for zigzags. And let's take a look how far price could go. Minus 272 target at 135. 136, 137. So those are targets to the upside. How about retracements to the downside? I would use a fib like this. Interesting, if we use it like this, we have even more confidence, so maybe we can do that. Leave it like this. All right. I would see 135 indeed, 137, the most confluence, and then 139. So, I think 135 or 137 could be turning spots for downside. Those seem to be pretty strong resistance. There seem to be confluence as well. So there I think we could look, I would be looking for swing trades at least to the downside from those levels. All right, dollar yen is basically showing, yes, very small sideways movement. We see a 4-hour candle here, bullish. That is basically all the candles after that have been within that bullish candle. It seems quite funny how price has slowed down so substantially after these volatile and big candles. And market seems to be really, really, really hesitant at this point, on the dollar yen at least. I think from this perspective, we definitely, I think, have to be cautious. A break, close below this 101 level could be good. I think for the downside, 295, 61.8 target. At this moment, this does not look like a bullish bounce. We are at a big 50 fib right here, this 50. But the price does not look very, very bullish. However, at this, this is a tricky phase, I would say. Yesterday, I was saying I'm looking for a 5-wave up for a 3-wave down before buying, or if it is a 3-wave up, then and it starts to fall, I'm actually shorting. That was the patterns I was looking for yesterday, wave patterns, because patterns occur on all things, right? Candlesticks, charts, fibs, waves. A lot of patterns happen, time patterns even. There are different ways, a lot of different ways to look at patterns. So that's the wave patterns I was looking for yesterday. Now, the 5-wave up is definitely nothing ever, we're definitely not even close to any 5 waves up. But it doesn't mean it cannot happen. This could still be a deep wave 2, and in that regard, these could still be bouncing spots. So that is a bit difficult environment for the dollar yen, I think. And from that perspective, it could be the best if price makes a zigzag like this and then turns here. In that case, if it does something like this, there's a good chance that price will bounce at this target. That could be maybe the better short, in fact, because as price goes sideways like this, it is difficult to trade, I think, considering the choppy up or the impulsive up and down, I should say. I don't have any, considering also the strong support and resistance on both sides. Price is really in a tough spot, and I don't think this is a very interesting pair at this point. All right. I had some other things I wanted to show you. Let's see. Euro yen. Was it euro yen? Let's see. I had a currency pair prepared for you. I think the pound odd was one of them indeed. The pound odd seems to be making that zigzag to the upside. Price bounced off the minus 272 target yesterday, as you can see. A lot of wicks at that target and making a retracement off of that. But now we see bullish price action. So I think we could see a continuation of the zigzag to the upside towards 182, perhaps 185. Just like the pound USD, in fact. So yes, this pound odd does seem to be able to make that retracement to the upside. You see, the thing is that we have larger downtrends at this point, of course, on all the pounds and some of these euros and yens. But the lower time frames are showing upside at this point. So there's a bit of a mixture here, depending on time frames. When looking at these hourlies and even 4-hour charts, you can definitely see reason for price to move up before moving down. However, the higher time frames are bearish, remain bearish. So that's why when price does move up, those could be good turning spots. I think that is, all in all, basically the market summary for today from my perspective. All right. So like the pound odd, for instance, a bullish candle like this, well, maybe a bit bigger, right? Could be interesting long with a stop loss below that candle, probably targeting the 38.2 fib. But being aware that 182 could be a stalling spot, a turning spot too. On an hourly chart, there could have been a good long potential here. That's where I took it, actually, the upside after this hourly candle. So that opportunity is behind us at this point. That's why I was looking at the 4-hour candle, and I'm up about 54 points. Now the reason why I took that trade was just basically on a zigzag pattern continuation, and we saw that we had a bit of a counter trend momentum here, and this was the first or second indication after this wick here that we were probably going to make a bit of a bounce at least, and that seems to be indeed happening. So trading zigzag patterns is very useful to combine candlesticks, I think, because you get extra confirmation of price turning, bouncing, breaking, like here, for instance. I'm trading the fib patterns, a zigzag pattern basically, but how do I actually trade it is with candlestick confirmation. All right, let me think. There was some other stuff I wanted to discuss, but I'm not sure what it was actually. Anyhow, the Aussie bounced off the 88.6 fibs. We're talking about this on Monday, that this could be a bouncing spot. Price is still using those levels to finally make it to the target I have in mind, which is 75 here at the minus 272 target, maybe extending up to here. So it looks like the Aussie is not giving up on that target for the moment. I would say at least until it breaks this trend line. Euro yen could also make that zigzag, but is doing so very slowly, but it could still do so, right? Hasn't failed as yet. It could fail though if it breaks this support trend line. That could be a good breakout to the downside. It is making kind of a bear flag pattern, awkwardly looking bear flag pattern, but a break certainly could be an interesting breakout. This is more of a 30-minute pattern in my view, so I would probably look at a 5-minute chart, a break of this trend line on a 5-minute chart, and a pause followed by another break. All right, continuing Kiwi. Let me change the template. This is the ACU template actually. The cool thing is that we nowadays have, since this week, we have a dashboard as well, so we're very happy with that because it makes things so much easier to basically view and spot. And what I said about the market, we have this only a few days really. I think since the weekend, and it makes things so much easier because you can instantly see what's going on, right? And you see just what I said, the uptrend on lower time frames, the downtrend on higher time frames. And we also have an alert system connected to it. So we're very happy with that. So you get an automatic pop-up connected to that. So if you're interested in that, in knowing more about that, just send us an email, all right? Anyhow, back to this Kiwi on a blank template here. And we are seeing, in any case, a break of this trend line. Looks like price is trying to make a continuation. It looks like we're back into a bullish environment almost. Especially on the Aussie and Kiwi. Yes, we had strong downside, but not as strong as the others. And one could see it as an hourly triangle, in fact. Good for our candle above this trend line. So let's take a look at the 15-minute chart. And we had basically a bull flag as soon as it broke right here. And even, well, this is not a bull flag, but maybe a bull flag. I don't know, a bit steep bull flag, but in any case, it could have been seen as a zigzag, a corrective zigzag. If we put a fib on this very first leg, you'll see it better on the 5-minute chart. If you put a fib on this first leg, you see a 38.2 bounce and almost a move to target. Very, very close, just a few pips away. So definitely looking more like a zigzag than a bull flag. This was more of a bull flag in my opinion, but both leading to a continuation after the bigger 1-hour breakout. All right, Euro odd, I wanted to show you too. There's a big pattern on the daily chart, support and resistance lines here. So maybe even the weekly chart. So as soon as this starts to break to the upward downside, we'd be zooming into 4-hour charts to look for the end of that momentum and a pattern. This could take long, but just to show you that these things not only have to happen on 1 hour and 15, like we've been discussing, but can be on higher time frames too, like a weekly connected with a 4-hour. Euro odd is an example of that. It doesn't have to be on lower time frames like we're doing. It doesn't only have to be on those lower time frames. These patterns repeat themselves on all time frames. It's the market is fractal of nature, so you see these repetitions no matter what scale we look at. Yeah, I guess that was about it. Somehow I had a feeling that there was missing a pair, but probably it's not so because it's not one of these exotics. So I must have discussed it already. Do you have any questions that you would like to ask about patterns specifically, or something else maybe, like anything you have in mind? I don't know, but tell me if you have any questions. But this is basically how I like to trade patterns, using fibs in combination with candles, using chart patterns after chart patterns. And obviously I use wave patterns in my wave analysis. Your dollar broke to the upside a 15-minute pattern, in fact, if you look at it from this perspective. We were looking at the hourly. We did talk about it, that there's a counter trend break possible. The euro dollar did not break to the downside, but yeah, it's true that it could have broken. You could see this as a 50-minute pattern. So the only way to zoom in is 1 or 5 minute. I don't like the 1 minute chart. So we would probably use 5 minute. And we don't really have a pattern after the pattern yet. Maybe we had one pattern here. We had a break, a classical break, pullback continuation. True. But I think that there will be another pattern. I think we'll see some kind of triangle or bull flag on the euro dollar. And I think that if that does happen, then there could be one more leg up as a follow through of that pattern break. One more leg up to complete basically a correction like this that could take price to the 61.8 fib, for instance, at 122.25. That would be a lot of movement. Maybe we will not get there entirely. Maybe the 50 fib will stop it, but one of those two, and which could be then turning spots for swing trade potentials. Okay, we got a question, my view on euro pound. Let's take a look. That's the wrong template, sorry. Let's quickly, there we go. Alrighty, we got strong momentum to the upside, no doubt about that. Price is right at resistance level, but if momentum is that strong, I will know as soon as this monthly candle closes, which is Thursday is the last day, which is tomorrow, in fact, right? So 2 days from now, we'll know how this candle closes. If the candle closes like this, the odds of this resistance trend line stopping price with such a momentum candle is low. And I would expect a break to the upside next month as a follow through of such a strong candle, such a strong bullish strength. So that is something we'll find out, but it looks likely that this candle will hold with a close near the high like this. Right? Weekly perspective, let's take a look. It looks like this could be a 5-wave up because we can wave pattern we see pretty clearly. A wave 1, 2, 3, 4. This could be 5. We see that wave 4 does not enter the territory of wave 1. Wave 2 does not break the bottom of wave 1. Wave 3 is bigger than wave 1, which is what we'd expect. So if we take wave 1, it's 550 pips. We've probably moved more than that already. Yeah. So wave 5 is definitely going to be more than wave 1. Wave 3 was 1100 pips. So the minus 61.8 target is possible. That would be about the same as a wave 3. The rule is that wave 3 is not the shortest, so wave 5 could even go further than that, but we do see a bit of a pause at the 272 target. Yeah, we're seeing some hesitation here. Ultimately, what could happen is that price still makes one dash up, hits that target, makes a bigger retracement, and then moves up to the minus 61.8 target. If we look at the fact that this is the turn of wave 4 for wave 5, if we look within wave 5, this could be wave 1, 2, 3. All right, so it looks like we're in wave 3 at this point. If this is a wave 3, let's take a look. Let's put a fib from here to here, going to the minus 61.8 target. If this is a wave 3, we're not sure if this wave 3 is finished. Let's take a look at the 50-minute chart even. it's possible that it is or not, because it could still push one more up. So what I would probably do, we're not certain if this wave 3 is finished, but if it is, then price should not go back into the territory of wave 1, which is here. So we wouldn't expect a push below the 80 level, right? If we put a fib from here to here, we would actually expect a 38.2 fib bounce or 23.6 bounce. So that's 82 or 80. That's where, without breaking 80, basically. That's what I would expect on the euro pound for the moment. So I'm not 100% sure if this is going to be the retracement, but if it is, those are the levels where price could go to before there's a good chance of a bounce, and price should not go back below that territory, right, below 80. Now, how about the question if this is indeed retracing or not? And if we look at the 4-hour chart, we see, how many candles do we see here? 9. So from a time factor pattern point of view, I do think that this is probably going to be a zigzag down to the 23.6 fib. So from this perspective, I think putting a fib on from here to here, looking at the hourly chart, all right, and we see already maybe a start of a break here to the downside. Already, in fact, a triangle that could be being broken right now. And from that perspective, as you see, so the targets, well, minus 61.8 target is the one we like the most, right? That's quite close to the 23.6 fib. That could be the area where price could make this zigzag fall, and I would expect a bounce here. Now that could be an interesting zone to look for longs. Look for candlestick patterns maybe at this confluence. Whether this will be the turnaround for upside, or will price basically extend the correction lower down to the 38.2 fib, that remains to be seen. It depends how price responds here. If price responds by building a bear flag, it will probably break. If it responds by building an ABC zigzag, it will turn and fall to the next target. If it responds with a hesitant start, but then a big momentum up, followed by consolidation, we should see further upside. If someone were to take a trade based on this analysis and you like that, and you might look for a candlestick pattern and you take that trade here, and price responds to that and you take it, keep an eye on how it basically reacts, because if it is showing a bear flag, it could be very wise just to get out of that trade at break even or a small profit. Get out of the upside, because it seems likely that we'll continue still lower. If price does start to move up from these levels that I expect, right, the 81.80 or the 80.80, sorry, the 82 or the 80.80, these fibs basically, then the target, we will get a break of that long-term trend line on the monthly. The target will be 86. There are a couple of targets here, I guess, and 88. I think on a high time frame, we were saying the main target is 88. Yes, indeed, that's the bigger target. The bigger target is 88. The smaller target is 86. So what we could see basically is perhaps a push up, hit that smaller target, see kind of a bull flag, followed by another move up, a break to the bigger target. We'll get more confirmation, as I said, on the monthly candle in 2 days from now. But for the moment, that seems the most likely. So we are breaking a 50-minute triangle. This is a counter trend, or 50-minute triangle lead, I would say. And well, we are breaking that triangle. This is a counter trend trade, and therefore very risky. But on the 5-minute chart, I guess if we do get a consolidation like this, that could be a good counter trend breakout towards the target. Now that's always risky, because the thing is with breakouts like this, even though we break a triangle to the downside, we still might bump into support that could turn price back up. And that's always the risk of trading against a trend. Or yeah, because we're facing the situation where even if we do get a breakout, price might bump into support level and make it turn back up again. Even though I suspect that price could go down to the targets I just mentioned. The thing is that all in all, this is quite choppy and quite sideways. And therefore, it is risky because price could just stay in this zone and turn back up again and then turn back down and up and eventually break up again, probably. So for any breakout trade to the downside, you have to realize it's risky, it's counter trend, dangerous from that perspective. That's nothing you can do about it. But one thing could be good if this hourly candle, for instance, closes near the low, then that would be a bit more signaling, a bit more confirmation that the bears are indeed, in control and could push this lower to the targets mentioned. All right. So thank you. Yeah. Great. Thank you so much, Oliver, for that, and appreciate your feedback there. And Asim is saying, how do you see the situation for pound dollar now? Well, I'm expecting, considering the bullish price action that has started now, we could see a bit follow through of that to the targets. My main targets are 135, 134.75, and 137. For the moment, 134.75, 135. I think there's a decent chance of price getting there. The thing is, the road up could be bumpy because this is a counter trend zigzag momentum. At these resistances, I would expect price, at one of these two, I would expect price to turn around for bigger downside trend continuation. But because of the unique political context and the unique situation that we're in, I think obviously it's a bit different than, let's say, the standard week we look at. We don't often face a 1900 pip fall within a day or two. Although I would think that momentum is enough to push the pound dollar lower and make a lower low and even a lower low. This is certainly a time where its usual patterns could be a bit different because this is a unique event. I guess things are from that point of view, we have to be a bit more cautious. That's what I want to say. But usually speaking, I would expect a turnaround at these fibs for at least two more lower lows. If I look at the pivot points on the pound, price is basically bouncing at the R1 here, which is the top two. This top is the R1. We're seeing a reaction of that. That's not surprising. R1 commanding respect. So as long as it stays above 133.40, which is the pivot around here, I think we are in bullish territory still, and we could see after the rise probably to 134.75, 135, which is the R2. All right, that is the R2, and that probably will be the turning spot for today. And depends on how the reaction is to this target, we might see a further collapse and further downtrend continuation. If price fails to make that a higher high though, and fails to basically bounce off these support levels, fails to the pivot, breaks below the pivot of 133.43, below it breaks below the M2 of 133.05, well, then we're looking at a failure. Then this intraday momentum will not see a follow through, and we're actually in breakout territory to the downside. So crucial zone right here, around that pivot and the M2, whether we get up or down intraday, I would say today. All right, folks, thank you so much for all those questions. Really appreciate that, and hope that you'll join Nanette tonight with momentum trading and key indicators. Tomorrow, we're going to take a look at Fibonacci part 2. I tried my best to put all that material within 2 sessions. It's a bit tough because I really had a lot to share. I, from my feeling, didn't manage really to say everything I wanted to say in the first part. I hope I can, manage within the second session to wrap it all up. So there's going to be a lot of info, I think, different ways of fibbing, fib strategies, and also other things regarding Fibonacci in general. If you want to take a look at the first part, by the way, then it's best to take a look and subscribe to Admiral Markets YouTube channel. You can use this link here, youtube.com user Admiral Markets FX, or you can just search for Admiral Markets here, and you'll find, as the search results pop up, you'll find Admiral Markets at the top, and you can click on it and click on subscribe, and then you'll be able to see all the newest webinars and videos as they are uploaded. So I hope to see you, as a member here too, and wish you all great trading. Be careful, and we'll talk to you soon. Cheers, folks.